Good evening. Thanks for tuning in. Top business stories today. Gold breaks the $2,000 mark for the first time ever, but we hear why cash may still be king, at least in the short run. Banks are tightening requirements for almost all loans. Analysts say it could be a signal they expect tough times ahead. Millions of dollars in PPP loans went to Chinese companies, some with links to the Chinese military. And Ford's CEO is retiring. Its COO is now taking over the company and its challenges. Historic day for gold futures. They broke the $2,000 mark for the first time ever. They're up nearly 2% today. In fact, they've been up 12 of the last 13 days. It's on pace for its best year since 1979, when it gained 114%. Oil, though, on pace for its worst year since 2014, when it lost 45%. It's up a little today, though. Overall, global markets pretty flat overall. The Dow rose 164 points, or 0.62%. The S&P 500 gained about 12 points, or 0.36%. And the Nasdaq added 38 points, or 0.35%. Despite all the excitement, Lance Roberts, chief investment strategist over at Real Investment Advice, thinks gold is overbought. He's buying US dollars as a hedge. Lance, great to see you as always. Thanks for coming on.
My pleasure always to be here.
Lance, you have been, if I'm not mistaken, you've been maybe suggesting that now is a good time for people to buy US dollars as a hedge. Now, what I find interesting about this, it kind of flies in the face of a lot of what we're reading in the media. Analysts, different experts are saying about the US dollar at the moment. But what's even more interesting than that is you've kind of addressed that in your latest publication. You said when the financial media discusses the dollar's demise, it's usually a good contrarian signal. Maybe you can give some insight into that.
Well, it's like anything in investing, right? When we want to buy something, we always want to buy something low and we want to sell high. I mean, that's the whole premise of investing. Well, once everybody's looking at some type of investment, generally you've already kind of missed the move in that investment in whatever direction is going to happen. So when the financial media picks up on a story, and no offense to you or anything, but by the time it gets to the kind of mainstream headlines, the move has already occurred. And as with all things can only move so far in one direction before you're going to have at least a rally back, what we call a retracement rally, in a position back. And so, one of the things that we look for as investors is that we're long the stock market now. We own Apple and Amazon and Microsoft and all the stocks that everybody talks about every day, because we have to create performance for our clients. But we also do a process of hedging risk against things that may take away that capital from us in the event of a market correction. And so the dollar can act as a hedge against a market decline. Typically, when markets decline, dollars gain value in terms of strength. Gold is also very overbought, so that's another position we own. So we're trying to hedge that position as well.
And I know Congress just today announced another $2 trillion borrowing. You're not worried about inflation with all this quantitative easing?
Yeah, I am actually. The question is when will that actually show up in the economy? Then there's two things about that. One, when we're talking about a hedge in a portfolio or a counter trend rally in the dollar, we're not saying that the dollar is about to take off on a long-term uptrend and it's all good. We're talking about something very short-term in nature, maybe 2 to 4 months, that type of thing. So hedging risk is not something that we do long-term. We're long-term investors. We hedge risk short-term against disruption. The problem with borrowing more money and more debt is that we're now expanding the national deficit even more. Another $2 trillion on top of the debt that we already have is going to push up towards $30 trillion in debt ultimately over the next couple of years. And that impedes economic growth. It's actually deflationary more than it's inflationary. And that's the one thing that for the last decade, every year the Fed tells us that, well, next year we're going to have inflation, so we need to potentially raise rates. But we never get inflation. We never get economic growth above 2%. And now, because of the debts and the deficits, we're looking at sub 2% economic growth going forward. So inflation is going to be less of a problem in the short term In the longer term, it might be an issue, but right now, over the next few years, it's going to be deflation is going to be the bigger issue.
Yeah, I can imagine, until at least we get some of this demand back in the economy. Lance, I really appreciate your time as always. Thank you.
My pleasure as always. Thank you for having me.
And banks are preparing for that deflationary environment. We've already reported on the record sums they're putting aside for potential bad loans. Now, British banks are writing off $22 billion for the first half of the year. The Bank of England says it could be the worst downturn in hundreds of years.
British banks have offered a taste of how much the worst recession in centuries is going to cost. The bill is currently standing at more than $22 billion. An analyst at Hargreaves Lansdown said, with low interest rates dragging on revenues, full-year profits will not be pretty. Bank provisions are required under accounting rules, but they also reflect concerns about how British households will cope with what could be the worst downturn in 300 years. 4 months ago, HSBC put the top estimate on provisions this year at $11 billion. Now Europe's largest bank says the cost could reach $13 million as the global economy deteriorates. One of the gloomiest reactions to the UK's prospects came from Spanish bank Santander. It said it had marked down the goodwill it had attributed to Santander UK by 92%. This highlights the way the crisis has forced a radical reassessment of the value of British banks. These predictions depend on how the economy fares as British leaders try to reopen the country. HSBC said the worst case scenario is that the UK's GDP could fall 9.6% this year.
American banks may have similar worries. They've tightened lending restrictions on almost all loan types. They could be bracing for a tough economic environment. I discussed with Daniel Lacalle, chief economist at Thesis. Daniel, great to have you on as always.
Thank you very much. Always a pleasure.
Daniel, why do you think we see banks tightening lending standards even as demand for loans fall?
This is super interesting. What we are seeing right now is that although central banks are injecting trillions of liquidity and lowering rates, that it's becoming more and more difficult to get a loan because credit standards are being tightened dramatically. And the reason for it is that banks cannot loosen credit standards at the same time as what we're seeing, a very large increase in non-performing loans, credit card delinquencies, etc. So in a perverse way, what we're seeing is that the central banks are drowning the economy in a sea of liquidity. That massive liquidity is going to financial assets, and it's not reaching the real economy, mostly because it could not reach the real economy in an environment in which the solvency ratios and the ability of businesses and households to take more credit is actually worsening.
And of course, the Fed is very much encouraging lending. It's encouraging lending, but will this reluctance to lend on the bank side, will this affect the Fed's plans?
I don't think it's going to affect the Fed's plans, but the Fed needs to understand that you cannot take a horse to water and force it to drink, that the economy is not demanding more credit because this is not a problem of demand for new credit. This is a problem of solvency, what we're seeing right now. What we're seeing is that many businesses simply don't have the sales to continue working, that many households are suffering because of unemployment. So it's not making it easier for these businesses and households to take more credit what is going to solve the economy. What we need to do is to put together an important package of measures directed towards the creation of new businesses, directed towards the improvement of the economy and the recovery of the services sector. It is not going to come from more liquidity. Unfortunately, I believe that the Federal Reserve Reserve will continue to pump money into the economy, will continue its very aggressive easing policy with very low rates, but it cannot address, to start with, and it does not address the problem of solvency. You don't solve a problem of solvency with more liquidity.
And very quickly, Daniel, of all the countries around the world, at least one of the worst hit is Spain, even worse hit than Italy from a GDP perspective. Why is that exactly?
There are many reasons. On one side, Spain has been very poor at addressing the pandemic effects with supply-side measures. The government refused to lower taxes and was very reluctant to introduce measures to help SMEs, small and medium enterprises, and households. The government believed that this was going to be a very short crisis, and that the economy would rebound very quickly and bounce back very rapidly, and it's not happening. The other problem is that the crisis is affecting all of the areas of the economy that could actually help in the current situation. Exports are down almost 33% in the quarter. The services sector is badly hit. Obviously, tourism is very important in the Spanish economy, but there are other elements that are being negatively affected. The government constantly and consistently talks about raising taxes, so that is obviously discouraging businesses from hiring and from investing further.
Daniel, I appreciate your insights as always. Thanks so much.
Thank you very much.
White House negotiators and top Democrats in Congress are continuing their discussions on the virus relief package. Both sides say they've made some progress, but there's still no deal. President Trump said he might even issue an executive order to help those affected by the pandemic.
Top congressional Democrats and White House negotiators met for about 2 hours Monday in Washington on pandemic relief measures. Senate Minority Leader Chuck Schumer said they're making progress on some issues, but not all.
There are a lot of issues that are still outstanding, but I think there is a desire to get something done as soon as we can.
One outstanding issue is whether to continue the federal benefits program of $600 per week. Republicans proposed a $200 per week and wage replacement program. Schumer said Republicans are sticking to their position. But Kellyanne Conway said Congress isn't doing its job, and it's not Republicans that are holding things up.
We're focused on August 3rd and the bills that people have right here and now. They're focused on November 3rd, Election Day. And so the president time and again has shown that he will step into the breach when he can, when legally possible, if Congress fails to do its job. And it looks like that is the case right now.
President Trump said he's considering issuing an executive order to help those affected by the pandemic. Democrats and Republicans also disagree on giving funding to cities and states, and whether there should be liability protection for businesses, schools, and hospitals.
Senate Majority Leader Mitch McConnell said on Tuesday that he would support any deal worked out between the administration and Democrats. He said so close to an election it would be impossible to get unanimous agreement. And while elected officials try to help American companies, a new report says hundreds of millions of dollars from the Paycheck Protection Program went to Chinese companies. Some that support the Chinese military, are considered a national security threat, or are media outlets controlled by the Chinese Communist Party.
A new report by Horizon Advisory says that $192 million to $419 million in Paycheck Protection Program loans, or PPP, were given to over 125 Chinese-owned or invested companies in the U.S. The report says loans went to affiliates of 3 Chinese companies featured on the Pentagon list of businesses owned or controlled by the Chinese military. 6 recipients were affiliated with state-owned companies that supply arms to China's People's Liberation Army. A robotics and AI company got $1 million to $2 million in loans, yet its parent company was added to the trade blacklist of the Commerce Department because of ties to the Chinese military. A branch of the pro-Beijing media outlet Phoenix TV also received loans. Although the company is private, a 2019 report says Phoenix TV is fully controlled by the Chinese government. The new report adds, although their participation saved U.S.-based jobs, it likely came at the expense of other small U.S. businesses. PPP loans were introduced to help businesses pay its staff and bills during the CCP virus pandemic. About $517 billion have been issued under the program so far. Congress and the Trump administration are currently negotiating a second stimulus package that is likely to include more PPP funding. A Senate Republican proposed that the stimulus bill disqualify China-connected entities from the loan program.
The United States is expected to borrow over $2 trillion in the second half of this year. Federal spending is ramping up, it seems.
The U.S. Treasury says it expects to borrow over $2 trillion in the second half of the calendar year. That's $947 billion in the July through September quarter and over $1.2 trillion in the October through December quarter. The Treasury said its borrowing estimates assume Congress will pass $1 trillion more in relief legislation in response to the pandemic. Since March, Congress has authorized about $3.6 trillion in new spending to help the U.S. weather the fallout. Meanwhile, talks continue on another relief package. Democrats want an aid bill that comes in at around $3.5 trillion, but Republicans want to cap spending at around $1 trillion. So far, the sides have agreed to another round of $1,200 direct payments to American families. Also, there's agreement on extending the Paycheck Protection Program to give small businesses access to more loans.
And the soaring government debt has got the U.S. a warning from a major credit rating agency. Fitch Ratings recently lowered its outlook on the United States AAA rating from stable to negative. It cited high deficits and debts and, quote, a lack of a credible fiscal consolidation plan. But Fitch is keeping its overall U.S. rating at AAA, the highest level. It expects the U.S. government debt to grow to more than 130% of GDP by just next year. It also said the future direction of U.S. fiscal policy depends in part on the November election. And still to come, BP cuts its dividend for the first time in a decade. Find out by how much.
大提琴不仅仅是一件乐器，它是有生命、有感情的，需要我们精心的照顾。往往我们一个小小的动作，可能都会对人情绪产生微妙的影响。天音的品牌是福星，我们对于传统的理念很荣幸被神韵艺术团选为指定供应商。时间是酿造音色的不可替代的陪伴。我跟大提琴已经有60多年的友情了，每一把琴都有它自己的个性，熟悉它，才能真正发挥它的潜力。所以，我希望给你的每一把琴，都是首先我所信任的。
Disinfectant wipes have been hard to find, and they will remain difficult to find well into 2021. That's according to the world's biggest maker of disinfectant cleaning materials, Clorox. With a 45% market share of cleaning wipes, Clorox said it aggressively ramped up production, but it still won't be enough to keep up with demand. The company's incoming CEO says with the pandemic expected to last well into the new year on top of the upcoming cold and flu season, it'll now take a year to reach the supply level necessary to meet customer needs. And Ford's CEO is retiring, but they didn't have to look far for a replacement. The company's chief operating officer will take over in a couple of months. He'll have to steer it through changing times in more ways than one.
Ford announced its CEO, Jim Hackett, is retiring in October. His chief operating officer, Jim Farley, will take over as president and CEO. Farley faces tough challenges as the industry emerges from the pandemic and enters a new era of self-driving and electric cars. The 117-year-old automaker is losing money, and it's trying to revamp its aging lineup to new vehicles, including electric cars. It's also in the middle of an $11 billion restructuring plan. Farley's been with Ford for more than a decade. As COO, he led the company's global markets and product development. He was in charge as Ford rolled out the new F-150 pickup, the new Bronco SUV, and the all-electric Mustang Mach-E SUV. 65-year-old Hackett took over in May of 2017. On his retirement, Hackett said, quote, "I'm very proud of how far we've come in creating a modern Ford, and I'm very optimistic about the future." He will stay with Ford as an advisor until March 2021 to help with the transition.
NBC Universal is laying off thousands of workers as it struggles with the impact of the pandemic. It's now shifting its focus to streaming services. The layoffs will affect about 10% of its 35,000 employees. Cuts have been made in all departments, including its theme parks, movie studios, and cable channels. Its CEO says the industry is shifting towards streaming and that the company has combined its television and streaming businesses. NBC Universal announced its revenue had dropped by 25% to $6 billion in the second quarter. And a tough quarter for BP as well. The oil and gas company has cut its dividend in half after a record loss in the second quarter. Large asset write-offs and a crashing oil price are to blame.
Hammered energy demand has forced BP to cut its dividend for the first time in a decade. On Tuesday, the oil giant reported a record $6.7 billion loss in the second quarter. The net loss was largely a result of BP's decision to wipe $6.5 billion off the value of oil and gas exploration assets as a result of sharply lower oil and gas price forecasts. The London-based company separately outlined plans to reduce its oil and gas output by 2030 and boost its renewable power generation. That's part of CEO Bernard Looney's strategy to reinvent BP and join a global transition to low-carbon energy. Looney, who took the helm in February, avoided a dividend cut in the first quarter of the year, despite worsening market conditions. But his hand may have been forced for Tuesday's dividend cut of 50% due to a collapse in oil and gas demand and fears that the global economy faces a slow recovery.
Ralph Lauren is also having a tough time. The company says its quarterly revenue dropped by nearly $1 billion. It struggled with store closures and a slowdown in demand for luxury goods around the world. The biggest decline in revenue was in North America, which had a 77% drop. Overall, the company's net revenue fell 66%. Ralph Lauren is more exposed than other apparel companies. Its jackets, coats, and dresses are designed for social or formal occasions, not from working from home. The company is considering a structural reorganization to weather the pandemic. It's also reported a mere 3% rise in North American online sales. That's a far cry from the triple-digit sales increases recorded by a number of other U.S. retailers. And Apple rises to the top. It's now officially the world's most valuable company. Despite the COVID-19 pandemic, the company posted revenue of nearly $60 billion in the 3-month period ending in June. That's an 11% increase from the same period last year. Shares jumped another 2.5% on Monday, giving Apple a value of $1.86 trillion. Saudi Aramco had been the most valuable public company since going public late last year. it's worth $1.76 trillion. And still to come, one pizza joint finds a new way to social distance. Find out what customers have to say after the break. Usually you want to put your phone away when you're eating out with your friends. But for one pizza joint in Spain, you're going to need it to order. It's pioneering a new dining experience with its own app.
How do you like your pizza? Gluten-free? Extra cheese? What about a drink on the side? Don't tell your waiter, tell your phone instead.
It's very interactive, very simple to use. The application is very user-friendly, and you even get a receipt.
This pizza joint in Spain is pioneering a futuristic dining experience that allows customers to avoid most face-to-face contact with staff. The restaurant, called Funky Pizza, has its very own app called Funky Pay. Customers place orders through the app and can even track its progress and estimated time of arrival at the table. Staff manage the orders from screens behind the bar. While it's an effective way to socially distance, not all customers are on board with the new style of eating out.
I'm not totally convinced by the experience because I think you lose the interaction with the waiter. For example, when you order, you can't ask about different preferences or quantities. The relationship with the restaurant is lost, so I'm not convinced.
At Funky Pizza, the only time you'll actually see a waiter is when your food is brought to the table. But this restaurant in Egypt has taken things to the next level. Here, your food will be served by a tie and apron-wearing robot named Mozo, meaning waiter in Spanish.
That's the latest business updates for today. Thanks for tuning in, and we'll see you again tomorrow.